In today's Property Insider Chat, Dr. Andrew Wilson shares the latest My Housing Market data showing that home prices surged following the rate cut in February. National home prices increased, as did apartments, and we're going to go through the reasons why that's occurred. It's not just because of the rate cut. So if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated each time a new show comes out. Believe it or not, we're now a quarter of the way through 2025, the end of March, so it's a good time to look at how our housing markets have performed. A year or so we've been waiting for a rate cut. Well, it's come. What's it done to the housing market? That's what I want to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Hello, Andrew.
Good morning, Michael. And no surprise, we've seen a bounce back in house price growth over March compared to February. We've got a couple of things that have been working to elevate the housing market in terms of activity levels. Of course, firstly, we're moving beyond those seasonal months of December through to February, where we have holidays and sort of back to work distractions. So we always get lesser activity during those periods. So we're now into March, with the year fully underway, and we're covering the first 3 months, even though it's a monthly data set. We look at the one quarter versus the previous quarter on a month by month basis. So no surprise, previous months have been a little weaker given those seasonal factors. So the seasonality is now to some degree behind us. And the other driver, of course, as you mentioned, Michael, was we had a cut in interest rate, and that's the first cut in interest rates in 4 years. To some, it was a little questionable, but it was predictable, and that's always a positive for the housing market, lower interest rates, particularly a cut after 4 years, Michael. And we always see that, or just about always, we see cuts to interest rates refuel housing markets, and perhaps that's been part of the growth factor that we've recorded over the March quarter compared to the February quarter. So let's have a look at the data. A very solid increase of 1% in the national house price over the March quarter compared to the February quarter. And that did follow, those consecutive falls that we had through January and February. And it is the highest growth level that we've reported since early last year, again, reflecting some of those seasonal issues that we have when we model house prices. Of course, typically the first and the third quarters are quieter in our housing markets. The second and the fourth quarters are stronger, and that's because simply we have less distractions and so more demand in those quarters. So we account for that, but there are ways to offset those seasonal factors, and that's when we look back on the year-on-year data, which tends to be a little bit more of an indicator without the seasonal constraints. So all capitals, with the exception of Perth, Michael, reported increases in house prices over March.
Very interesting about Perth, which was the front runner for quite some time.
Well, it's the first decline, and it was a reasonable decline, down by 1.2%. Now, that's the first monthly decline we've recorded since September 2022, Michael. So that's been a long period of growth for the Perth market. We know that it's been a booming market. Of course, it's coming from a bit of a long way back. It's been a clear underperformer over the past decade, and perhaps it was in catch-up mode for most of the past 2 or 3 years. But those early signs just indicating that it's perhaps reaching the peak of its cycle. But we've got to understand that Perth still has a very strong economy. Western Australia has the strongest state economy in terms of not just GDP performance, but also the labour market. And we're also seeing some interesting numbers in terms of migration into Perth, particularly interstate migration is quite high into Western Australia at the moment. So perhaps chasing job opportunities or lifestyle issues, but certainly the drivers are still quite positive for Perth. And of course, Western Australia has the highest incomes of all the major capitals. So perhaps it won't last long, but early signs are there that the Perth market has peaked out. A good result for Sydney, Michael, up by 1.8%, which is quite a robust outcome in terms of prices growth over the March quarter compared to the February quarter. We shouldn't really be surprised, Michael, because we've seen some very solid auction activity in that Sydney market this year. In fact, clearance rates in Sydney have been tracking above 70% for most of the year. So as we know, that auction results, those weekly auction results, are a very good forward indicator of underlying housing market activity.
Yes.
And it's proven to be correct again in that Sydney market that's had the strongest result of all the major capitals. In fact, it was only Canberra and Darwin that outperformed Sydney in terms of monthly prices growth. I think Melbourne also had a reasonable result there, Michael, up by 0.8%. And just referring to those auction results, that's also been a stronger year so far this year for Melbourne than really we've seen for the past 12 months. Perhaps that's now translating itself into some prices growth. Brisbane keeping on, up by 0.3%. When we look at the annual growth figures, although Perth declined for the first time since September 22, it still leads all the capitals in terms of annual prices growth, still up by 15.8% over the year. So that's a good dividend for Perth homeowners, Michael. Adelaide, number 2 there, up by 10.2%, and Brisbane up by 9.5%. Despite that growth over the quarter for Melbourne, it still remains 1.8% below where it was a year ago. So still some, I guess, reasonable value opportunities in that Melbourne market, and perhaps that's what's driving better auction results that we've seen this year so far.
Now, Andrew, why I like the My Housing Market data is because we've just gone through houses, we're about to go through apartments, and many of the other research houses don't do that. They lump them together as dwellings, and that gives you a different sort of picture, because in Melbourne, for example, 33% of all the dwellings are apartments, so it skews the figures. I think this is much better, and I know each Saturday you report and Sunday we put in Property Update the auction figures, and you even do that by regions, because there isn't even just one Melbourne market or one Sydney market. So having this is valuable. And maybe we could just explain how your figures are slightly different to some of the other research houses. And you started to say that your methodology is not just what's looked over the last 4-week period or 5-week period for the month, is it? You get a better, more accurate result by looking at quarter over quarter. Would that be a fair assessment?
So that's month by month, Michael. So every month we take the previous 3 months of data and then we advance it by a month the next month. So you're getting quarterly data sets. So there's plenty of information there, plenty of sales that we track, but we advance it month by month rather than having static quarters that some do.
Yes, sure.
The March quarter, the June quarter, the September quarter. No, we have a month by month quarterly result. So yes, it is exposed, like all of them are, to seasonal factors, as we've seen recently, but it does show you that underlying trend, and it does produce results which have significant numbers of observations. So, you know, the medians that we produce here are pretty much similar to what the other medians, the other models do, the house versus unit modelling. You know, Michael, talking about aggregating houses and units, I mean, most people are either house buyers or unit buyers, and it's a different demographic. We certainly have more first home buyers and investors in the unit market per se. But, and it's interesting, and I think it's valid to separate the two.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, we've discussed how house prices have done over the last month. What happened to the unit, the apartment markets, Andrew?
Well, they also had a solid month of activity, Michael. Again, it's a bit of that rebound factor coming off the seasonal impacts, but not so much seasonality we see in the unit market. It's more really a house market issue, seasonality, in terms of aggregating housing market results. Unit prices are up by 1.3%, so that's a sharper rise than houses. As we remember, national house prices up 1%, national unit prices up 1.3%. And that was the second consecutive rise in unit prices. And it was the big three, Michael, that really led the charge, with the exception of volatile Darwin, which has a lot of local seasonal factors, the wet and the dry, of course, that generate that prices in Darwin. But we had the Brisbane market, which just shows no sign of slowing down. The Brisbane unit market, a very strong result, Michael, up by 2.2%. Over the month. Melbourne up 1.4%, Sydney up 1.2%. And of course, our national figures are based on a weighted average. So clearly, in terms of the unit market, Sydney, Melbourne and Brisbane make up the greater bulk of unit activity nationally. And if they're rising, then the national price will rise. But yeah, real shout out there to that Brisbane market. Gee, can we remember the times when people were talking down the Brisbane market in terms of its prospect because of perceived high levels of new building? But Brisbane units are leading the charge over the past year, up by 20.2% over the year. Gee whiz, that's a strong result, Michael, continuing. Sydney units up 2.5%. Adelaide and Perth, which have smaller unit markets, also up strongly over the year. Melbourne had a good result, Michael, again up by 1.4%. So we're seeing some early signs there that Melbourne market may be starting to move up a gear at last. Still down 1% unit prices in Melbourne over the year. But once again, Michael, this is reflecting auction clearance rates this year in Melbourne, which still haven't reached 70%, but they're pushing towards that number and are clearly higher than where they finished last year, and also tracking at around about, and sometimes a little higher than where they were over the same period last year. So some positive signs still coming through in that Melbourne market, and we'll see if those trends can continue going forward, but certainly still offering good value opportunities, particularly in an environment where we've had cut to interest rates recently, and as I mentioned, the first in 4 years. So I think the outlook for housing markets remains positive, Michael. That lower interest rate will certainly help to generate activity, perhaps as we've already seen over March. I'm not sure we're going to get another cut anytime soon, but certainly, the market and perhaps the Reserve Bank are alert to another cut in interest rates. And of course, if that occurs, that will continue to stimulate housing markets. Of course, other factors, the economy, a little bit of mixed data lately in terms of the labour market, but still very strong, a very low unemployment rate. We'll see if that's the beginning of a trend, but regardless, we've still got an extremely robust labour market. Similarly, even though migration levels have just eased recently from those record high levels in the post-COVID period, they're still quite strong, and that will help to drive more demand for properties. I think that the outlook remains positive. Not sure we'll get the same sort of prices growth this year that we had last year, particularly in those sort of big three movers, which was Brisbane, Perth and Adelaide. I think Sydney's set for another reasonable year, and I think Melbourne is still got the potential for a revival, and there are some early signs there that might occur. And of course, the other point for investors is our rental markets have, after a period of easing last year, Michael, our most recent data is showing a tightening of vacancy rates, which still remain quite low, and a resumption of higher demand for rental properties. And as we know, that will end up eventually with higher rents going forward. So that's an attractive proposition for investors. And it's also a motivating factor for first home buyers who want to avoid the rental market and will be keen to take up those lower interest rates, and also be wanting to get into the market before prices rise again, which we're seeing occur now. So all in all, I think our housing markets are showing a very positive start to the year, one that we were sort of expecting. And of course, we now have the period of elections.
It'll be an interesting April, Andrew, because we've got Anzac Day, we've got Easter, we've got the lead up to the election, which puts people on hold. They often put their decisions off, but then life goes on once the election's over, doesn't it? So all those those underlying factors are still there. And both parties have got policies that are going to increase demand, whether it's on the one side, allowing first home buyers to enter the market using their superannuation or a help to buy scheme. That'll get young people into the market, but there's no extra supply. So that's going to increase demand, not change supply, really. That's, again, a positive for our housing markets. I can in some ways call it an established homeowner grant rather than a first homeowner grant.
Yeah, absolutely, Michael. That's the one thing I didn't mention. We still have chronic levels of new building, of new home building. And I think that's just been put in the too hard basket by the government, realising, despite those, have we heard anything from the government about their aspirational targets for building levels, which of course have fallen well beyond those?
Build some modular homes, I think somebody was suggesting.
Just add water and off you go. No, we shouldn't joke about this. It's a very serious situation when we're not building enough homes for our populace.
No.
Despite all the intentions of governments, we really haven't seen anywhere near the levels that we need to have. And as I said, I think the government wouldn't want to be answering questions in regard to their previous targets for home building. Of course, the government doesn't build anything. They can provide grants for state government infrastructure. But, that's the problem. If you start making targets and you don't really have an influence over them, significantly, then you're always going to run short. We have systemic problems with new building in this country, and a lot of other countries have the same problems, and it's going to take a long time, if ever, to get to the point where we can match supply with demand. And the sobering news is that our actual revival, which we did have a marginal revival in house building, is now looking like it's ended, and house building levels are starting to fall in terms of approvals. So that's another factor that will only add to increased activity in the, as you said, the established housing market because of lack of new supply coming through.
Well, thank you for giving us the My Housing Market March report. I look forward to catching up with you next week for our regular Property Insiders chat.
Thanks, Michael.